Today we are going to make a stock analysis screener in Python. The end result will look like this. So as always, we start with the following items to make our stock analysis screener. We're going to use three imports, the Yahoo Finance import, the Pandas import and the CSV import. And we have a database for our Dataframe as we've seen already in the previous videos. If you don't know how to do this, look at the previous videos. I will explain it in there more in detail. But this is our starting point. If you like to follow along, in the description there is a link for the complete script of this tutorial. So if you miss a point, don't worry. At the end you will find the complete overview of the script in the link below. Okay, let's start. I've made a snippet over here in the text file, so I will copy these items and explain them as we continue. The first thing we have to do is make a few functions. We're going to make a performance function that's over here, and this performance function will create the following items: the year percentage performance of a stock, the compounded average growth rate, the standard deviation, the 52 weeks high, the 52 weeks low, the correlation, the amount of positive days, the amount of negative days, and the amount of neutral days. For now I've put in pass, so we're going to work on this function furthermore, but for now I'm going to put in pass because we also need to have a dictionary, and I will start with Microsoft in the dictionary, but at the end we will take the whole Dow Jones index, so I think 30 companies will be included. And we're going to make a function write CSV. We're going to write the output from this performance function in a CSV file. But for now we're just looping through the dictionary. So for name in tick dict, a ticker is a ticking name, and the performance function will be called, and in the performance function we will have the name, the ticker, the amount of days, and the save, and in this case we say no, and in the end we say yes. So this is the basics of our screener for today. So the first step we're now going to do is adjust the performance function, and I will go back here and I will copy this and paste it in here. So what we see, we're going to make a, let me delete this one. Okay, and we like this. Okay, so we are going to call the data frame by calling the database. That's here. We make a data frame of the amount of days. That's here. And we're going to make the first function, which is the yearly return. That's this one, yearly return. So we'll make a variable that's based on the data frame close row from the last day or the first day, divided by the closing of the last day. And if you take a year, you will have 253 days. You can also take 250 or 255, but if you want to be precise in this case, you need to take 253 days. The year will be printed in a format, so it's a 2 decimal percentage. That's this script over here, and of course we'd like to print it. So if we are going to print it, and I think we can do it right now, then we will see what it looks like. So one moment, I will run this for short, and there you have it. And here you see the year percentage, the yearly performance in this case for Microsoft is 56.58%. Okay, so this is the yearly return, and we're going to make a next point, which is the compounded average growth rate. You will see it over here. I will copy it and paste it in like this. Compounded average growth rate. Basically, it's the daily return which adds up to the 56.55%. But what of course is interesting to know is what is this CAGR? For this you need to have a starting date, you need to have an end date, and you need to have the amount of periods. So these three variables are made here, and this is the formula, and the formula for the CAGR is the end divided by the starting date to the power of 1 divided by the amount of numbers minus 1 minus 1, because this is also a percentage. So altogether this is the formula for the compounded average growth rate. Also here we like to make it a percentage, and as this is a small amount, we give it 4 decimals, and we also like to print it like this. And also this we can print, so let's run it again to see what it looks like. And there you have it. A daily CAGR, compounded average growth rate, of 0.1781% leads on a yearly basis to 56.58%. So that's the second one. Let's go to the third one, and the third one is the standard deviation. And copy and paste it once again. Standard deviation. Well, this is a standard formula in the Pandas Dataframe. So we're going to make a new section in the Dataframe. Call it day pers, daily percentage, and that's a percentage change from the daily close. So this, let's undo. Let's undo that. Okay, like this. So the standard deviation can be drawn from this percentage change, and here we have it. So what's it? It's the Dataframe from the amount of days plus 1. So it's the minus amount of days plus 1. And it's from the daily percentage, the values, and there you draw the standard deviation. So this altogether is a standard option in the Dataframe. You can use it and create your standard deviation upon this range. If you change the range, for example, you make not days, but you make it minus 100, then you get the standard deviation over these 100 periods. But we'd like to make it over the total period. So that's the reason why we take days. Once again, we like to print it, and it's also formatted in a 2 decimal percentage, which you can see here. So let's print to see what it looks like. And there you have it. The standard deviation 2.69%. Okay. The next one, 52 weeks high and low. Let's once again copy paste. Once again, you need the daily percentage, which is also over here. So you don't really need to define it once again. We can skip it over here because here we already made it. Then you want to have the high up, which is the highest part in the range, which is the highest part in the range, and it gives you an index max over here, which is also a standard formula in the Dataframe range. So the index max gives the highest value on this row in your Dataframe, and the same goes for the index minus, which gives the lowest percentage in the range from the daily percentage. Once again, you like to format it to a 2 decimal percentage, and you take the variable, and as it is the 6th item on the Dataframe row, you need to take number 6 over here. Normally a Dataframe taken from a time series has 5 columns, but we added this one, so this is the 6th column. And also here you make a high and a low, which you can then print, and which you then can select and print, like you see over here. So let's run it again to see the output. Okay. So in a year time, Microsoft had a performance of 56%, a plus of 56%. It had a daily CAGR of 1.781. It had a standard deviation of 2.69. Its highest momentum in the year, in one day, that needs to be said, in one day, is 14.22%. And its highest low in one day is 14.74%. Well, the 14.7 minus is of course in the spring of this year, and I looked it up 2 weeks before the market crashed due to the COVID crisis. Microsoft added on one day a 14% jump. I think, but that's an assumption from my side, I think they had great quarterly figures on that moment. So in a few weeks they were back on track, because 14 up and 14 down is almost zero. So the next item we'd like to add to the formula is the correlation. Okay, copy paste. There you have it. For a correlation, you need to have a second. Dataframe, and in this case, we're going to take the Dow Jones Index. And here you see why it's easy to make a class for your database. because now you can easily make a second data frame running on the same function, running on the same class that you made already at the beginning of the scripting. So we call this data frame 1, which is the Dow Jones index. We give it the same length, so the same amount of days, which is 253. So the range for your data frame 0, which is Microsoft, is equal to data frame 1, which is the Dow Jones. We're going to also make a percentage close row, which we call day percentage, which is the same as the day percentage from Microsoft, but this is the day percentage from the Dow Jones index. And from these two rows we make a correlation function. And also the correlation function is a standard function in the pandas data frame. So what is it? You make the df, which is Microsoft, correlate with the df1, which is the Dow Jones. And as the day percentage is the sixth column in the data frame, you select 6, and we want to have it a round figure, so we make it round on 2 decimals. You can do this on 2 ways. You can do it like this, like the format function we have over here, which gives also a 2 decimal, or you can do it with the round function as we see here. There's no difference. You can use both of them, and I use them, well, as you see, I use them both. Okay, also this we'd like to print, so once again let's print to see what it looks like. And there you have it. And the correlation, and mind, this is the 1-year correlation between Microsoft and the Dow Jones index is 0.79. Correlation of 0 is no correlation. A correlation of 1 is a complete correlation. So 0.79 is on the high end. So as you can see, Microsoft is correlating strongly with the Dow Jones index, or vice versa. Okay, the next item we'd like to add is the amount of positive, there you are, positive, negative and neutral days in a given period. And in this time we look at a year, so the amount of days, positive, negative, neutral, in 1 year. We start with making 3 lists, an empty list for the amount of negative days, an empty list for the amount of positive days, and an empty list for the amount of neutral days. And we look through through a range, and the range we take is the length from 0 to the length of the data frame. Well, the data frame is 253, as we know here, because that's the number we give it. But as you can change this number, it's better to make the length variable. So if you make this, for example, 100 or 1000, it will loop through all of these days, given the amount of days you put in your function. So you look through the amount of days for I in range of 0 to the total length, and then you make a few if statements. The first one, if the daily percentage from I is lower than 0, then you append that one to the negative days list. Otherwise, if the daily percentage from I is larger than 0, then you append it to the positive days list. And at the end, if there is no difference, you append it to the neutral list. Well, in reality, mostly it will be either positive or negative. The amount of neutral days are not that common, but there will be neutral days, as we see in the end. Okay, and once again you can print it, so we make 3 print statements, and let's print it just to see how it looks. And there you have it. Okay, so Microsoft had in the last year 148 positive days. So the closing of the day was higher than the opening of the day. It had 102 negative days, and as you can see, also 3 days that the stock was not changing over a 1-day period. So the opening was equal to the close. Okay, and these were the items, as we saw already over here. These were the items that we'd like to have in our function. So now we have all the variables in our function which we need for our analysis screener. The next step is to save it as a CSV file. So I will take the next snippet and place it in the function. Okay, and I will also copy this function over here and copy this one over here. Okay, so let me start explaining what is going to happen. First, I'm going to explain the definition write CSV, because now we're going to write a CSV file in which we save all the analysis from the companies that we run through the performance function. Okay, so the first row with open analysis.csv in a writing mode as data file. This is an opening for a new file, and in that new file we'd like to place the data that we generate in the function above. So we have a data writer, so we write a CSV file in which we place the data file which we just opened. We have a delimiter of a comma, a quote char of double comma, and a quoting CSV quote minimum. These are the functions that you need to activate. Then we make the headers in the CSV file. So data writer.data row, and we're gonna put in the various descriptions of the information we'd like to see. So we'd like to know which company, the ticker, the year percentage, the CAGR, standard deviation, 52 weeks high, 52 weeks low, the correlation, the amount of positive days, amount of negative days, and the amount of neutral days. So now we have made, with this script, we have made the CSV file, we have made the headers, and now we can fill the files with the needed information. So after this part, it will run through the dictionary and it will pick up the information from the dictionary and run it through the performance function which we already created over here. Well, if we are doing it like it is now, then we will only have the information from Microsoft Corporation. That is of course not what we want. We want to have more. So I've made a complete list, and I will copy it again. A complete list of all the Dow Jones companies, including also the Dow Jones itself. So in total I think it's 31. And now we have a dictionary of 31 companies which we can loop over and save the information in the CSV file. Well, let's run it and see how it works out. Okay, it ran through the total dictionary list and it made a file over here, and let's see. Well, indeed it's filled. Okay, so what we saw now was that it ran through the complete list of the Dow Jones, in the dictionary of the Dow Jones. It made a new CSV file over here. It ran all its in analyzing information through the performance function, and it saved it. And that was the one point I did not mention earlier. I changed this one from no to yes when I copied it over from my text file. If you make this a yes, then as you can see here, if save is yes, then it will automatically save the file to the CSV and save the information to the CSV file. Okay, so basically we are done, but on the last part, because this is really why we're doing it, is to read the information. So we'll make a new function. I'll copy it over here. We call it read CSV, and I see I have to adjust this one to like this. Okay, so this is a function which will read the CSV. It calls a data frame. Once again, it calls a data frame. You can make it df or you can make it df2. It really doesn't matter. That's for, I think this is better. It reads the analysis CSV which we created just a few minutes ago. Set the amount of columns to the maximum with none, so it's not maximized by amount, but it takes the total amount of columns and the total amount of rows and prints it out on the screen below, and then we print the data frame. So let's run it once again to see how it looks, and there you have it. So here you can see we have the data frame. I will enlarge this one somewhat. Here we have a data frame in which we have the company, ticker, year, CAGR, and all the other information, as you can see here, perfectly per company selected. Well, as it is already in a CSV, you can make it in a data frame. You can run all kinds of analysis on it, or you can, if you prefer, also, let me show you, you can also import it. Okay, then we need to have this one, I think. One moment, and I will, okay, and there we have it in Excel as well. I will make it a little bit nicer, but this is just for fun. And a filter, okay. And as you can see, now we have it in Excel. And for example, if you want to know which company had the best performance in last year, then you can see Apple performed the best, Microsoft was the second best, Nike, United Health, Caterpillar, and here we have the Dow Jones index itself. As you can see, the correlation for the Dow Jones is 1, which of course it's compared to itself, so it's only logical that it's 1, and you can see that these companies are all performing, let me make it a little bit green like this, better than the average, which is the Dow Jones, and all these companies are performing less than the Dow Jones, and the Dow Jones is neutral, so let's make it blue. And here you have it. You can select it in all kinds of ways. You can select it on the CAGR, on the standard deviation, on the 52 weeks high or low, the amount of days, neutral, positive, negative, any way you like it. And of course you can add all kinds of analysis to the CSV file, and in this way you make a analysis stock screener. I hope this was of interest. As said, the total script can be found in the description below. If you like to copy it, feel free, and hope to see you next time.